Hello, everyone. My name is Vaibhav Puranik. As usual, welcome to the OMC Real Estate Podcast. Now, it's interesting, right? Usually, our podcast is about some topic in real estate, but today I have a non-real estate topic. So we're going to talk with someone who does something in stocks investing, and he helps people with investing in stock market. His name is Adi, and he lives in Sacramento. And I happened to work with him a couple of times. I actually physically have met him when I went to Sacramento. He's a very interesting person, definitely a smart person, someone I respect. So I wanted to know more about his area of expertise. And I think our investors are investors, right? They always invest in real estate as well as stocks, as well as various other investing channels. So I thought our investors will benefit from knowing stock investing as well. And that's why we have Adi here. So Adi, first of all, welcome to the OMC Real Estate Podcast.
Hey, Vaibhav. Thanks a lot for having me on the podcast. I really appreciate you bringing me on, and thanks for the kind words in the introduction. I'm looking forward to our conversation.
Perfect. Just tell us your background, like when did you come to the US, and what do you do right now? Like what does stock investing really means? Like what exactly do you do in that field?
Yeah, no, for sure. My name is Adarsh Shyamsundar. I go by Adi for most people. I'm a financial advisor as well as a fund manager today. My financial advisory firm is called Polaris Capital Management, which I launched in 2022. And my fund is HSA Investment Fund, which I launched in August 2025. Right. On a personal front, I live near Sacramento in a suburb called Eldorado Hills. I live with my lovely wife and two wonderful children. They're still in school. And apart from personal finance and investing, I love technology, learning, reading, traveling, and volunteering locally. Right. That's where I am today. And Vaibhav, I know you asked me about my beginnings. When did I come to the US? How did I land up here? So, like many immigrants, I came here for my studies. I came here for my master's in semiconductor physics. I can say semiconductor physics today, most people get it. At that point, many people did not know semiconductors, but today everybody knows about it. And so I pursued my master's in Arizona State University, and I graduated in 2002. Right. But my background, like I said, like many immigrants, I came from a middle-class family, didn't come from wealth. Came to this country to really pursue my passion of designing and building chips. Right. I mean, for me, when I got here, my only interest was really to work on chips, and my dream company was Intel. So, I graduated in 2002, and luckily enough, or through my hard work, I was able to start at Intel in 2002. And then I worked roughly with Intel for about 8 years. We got spun off into a smaller company, and then it got acquired by Micron. So I was with Micron for another 10 years. So, give or take 10 years of each with, the Intel piece and then 10 years with Micron. So I did 20 years in the semiconductor industry. And while I was at Micron, I also got my MBA from UC Davis, and I graduated in 2017. So that's kind of my education and work and formal background, to give you some hints on it.
That is very interesting. Semiconductor physics. I don't know anyone who has done semiconductor physics. So what university did you go to? UC? No, before UC Davis, what university did you go to in US?
Yeah. So for my master's in electrical engineering, semiconductors, I went to Arizona State University, which is in Tempe, Arizona, close to Phoenix. It's close to Phoenix.
Right. Yeah, that's great. I mean, it's just like me. You came here to do your master's and then made a whole career here.
Right.
Right. How old are your kids?
I have two boys, 15 and 12.
15 and 12. Okay, they're about the same as my
Okay.
daughter.
Yeah.
Son as well. So that's great. And so tell us more about your earlier experience, right, in the tech industry or semiconductor. Like, what exactly were you doing in there? Were you like designing, or what were you doing?
Yeah. I hope I don't get too nerdy on this question or start geeking out. But yeah, my bachelor's in India was also on electronics and semiconductor physics. So I did what's called as VLSI design. And my engineering bachelor's project was using a Intel microprocessor. So I wanted to design microprocessors. That was my goal. But when I got here and when I graduated, I started working in the memory space. Memories that are used for storing your pictures, your phone numbers, your Netflix movies these days. So I primarily focused on working the full life cycle of a memory chip, whether it's from inception all the way to qualification, and even when it goes to the customer. So I've seen the full life cycle where a chip starts with nothing but a software design, going through silicon and being delivered to the customer. I've seen and worked in each of those phases of the semiconductor chip.
Okay, that's pretty crazy stuff, because I'm a software developer. I mean, I've started my career as a software developer, so I don't understand anything on that side. So it all looks pretty fancy to me. So, okay, you're working here for like almost 20 years. And then what happened? Like, how did you suddenly become a financial advisor?
Yeah, no, great question. And the most common question I get asked, and I tell people I'm what they call as an accidental investor, right, and an accidental financial planner. Growing up, or even when I was here for my master's, I never thought I would be doing this 20 years on. And the story is a bit long one, just bear with me, but you come to this country, like I said, I didn't come from wealth. It's the first time I'm seeing wealth and money and 401k. In those days, there used to be options, a lot of options, RSUs, and you start to think about investing, and we have some free cash flow, so to speak, right? And then I started reading about investing and investing on my own. Like many people, I just started investing in the index fund. I was doing the 401k, so I learned what are the various instruments in the 401k. So those were very humble beginnings in terms of getting to investments, right? And at some point in 2004, 2005, one of my managers, said, "Hey, you're trying to invest. Don't just go randomly. Read the letters of Warren Buffett." And I think that was a turning point for me in terms of getting hooked on to investing and investing in stocks as businesses. Right? That's where it started. That's the key message I took away from Warren Buffett's letters. And when 2008, the great financial crisis happened, 2008, 2009, I'd worked for about 7-8 years. I had money under the belt, and I was the first class of YOLO, so to speak, right? You only live once. And I just copycatted Buffett, took a lot of his holdings, but I did some tech investing. But really, it's the lessons I learned from reading those letters and some letters from Jeff Bezos that pivoted me towards this. And my success grew and my interest grew in that side. And it was like I'm investing besides like a Jeff Bezos or Warren Buffett into companies. That's the start of it, 2005, 2006. And then, sure enough, I gained success with investing, and it sort of became a passion. And, as my assets grew, I was growing at Micron in my job. So at some point, I was really having two passions, and I was working 24/7. And, I kind of became, like I had to pick one of my passions, right? And that's a breaking point. But also, I don't want to look back and say, hey, look, I had the opportunity to start my own fund, manage money for other people, give financial well-being to people, and having missed that opportunity, right? So my passion with respect to finance and investing, along with the fact that I wanted to dive with my boots on and not a guy who can sit home or go on cruise for a couple of months. So combining those factors and the fact that it's sort of now or never after being 20 years in the industry, to go to something on my own, which is in finance and not in the semi industry. So these factors play together and help me make a decision on the pivot. So, like I said, sorry for the long answer, but it's a great question.
No, it totally makes sense. Like you were passionate about it, and one day you said it's time to just pull the plug and do this full time. And it's great that you were in a position to do that, and it's great that you were confident about it, because sometimes you have to take big risks to actually like hit big. So, and by any ways shaped by the first 20 years, the experience in semiconductor industry, did it help or did it not help? Like, what's your take on it?
No, I think it helps. Like I mentioned, my investing framework itself was definitely molded by Warren Buffett, Charlie Munger, and in some extent Jeff Bezos' letters. But being in the semiconductor industry helps a lot of investing. It's a lot in some sense. Like investing, the key tenets you need are long-term thinking, patience, right? And you want to be able to use the downturns. Investing also is in some sense cyclical in nature. So when I used to be in the semiconductor industry, it just be a lot more cyclical 20 years ago. Right now, it's like the demand for semiconductors is like through the roof. But for the longest time, it was cyclical. And during the downturns, we would diligently work. We knew what the technology was. We had to just get through it, because the next chips that would come out would bring in the revenue and do wonderful things, right? But it does take 2 years, give or take, to make a chip and bring it out and mass market it. So you have to be diligent during that time, put in your work, and your rewards will come through. So in that sense, the investing cycle is sort of similar. Markets always don't go up in a straight line. There are downs, but you need to be able to use the downturns, put your head down, make sure you're investing. So it's similar in that sense, that I took those lessons. It kind of like naturally flowed into investing in some sense.
Okay, that makes sense. Yeah. And when you said you are inspired by Charlie Munger and Buffett, can I call it value investing, or is that an appropriate term?
Yeah, value investing is kind of become a redundant term in some sense, right? In the sense that a lot of people just use it, and they mean multiple things, right? But Buffett himself said that value and growth are joined at the hip. It's not separate. You cannot, without growth, there's no value, right? So, I'll say yes, because that's the lingo that's used to
colloquial meaning of the term,
to paint the broad brush. But it's really the principles of don't take leverage, invest like a stock as a business, right? And make sure when there's fear, you're greedy, and when there is greed, you're fearful, right? I think it's the those aspects, the non-IQ aspects, the mental aspects that are more important. The mental model is more important than bucketing people into value, or you buy low price to work, or some metric, because that's never how it really works out in the grand scheme of things.
Right. Is there a big mental shift from being a senior engineering leader in a big company and becoming an investor, full-time investor?
Yeah, yes and no. I think I know we've so far spoken as an individual investor, right? So my investment journey was obviously solo, right? I didn't have anybody. I mean, I had visceral input from all these great masters, but I had to make the action. I had to invest, and in that sense, it was an individual journey, right? For reference, my wife is an engineer. She doesn't want to do finances. Right? She's like, you do all of it, right? So in the broad sense, it was an individual journey. But the shift is hard, because I went from being in the corporate world, working for Fortune 500 companies where the tools are available, the people are there, you can share ideas, to like, I'm everything in my fund, right? I'm everything in my Polaris Capital Management. I have teams that help me in the background, and so on and so forth. my back office is managed by somebody and so on and so forth. But fact that you can't walk up to somebody's cube and like, hey, I have this idea, let's exchange, let's talk, right? Let's do some math, let's do some coding. So there is a shift because you have to be able to understand that you're your own self-motivator. You have to set your own goals. And luckily for me, I've always been that way in the corporate world too. That helps. But if you're not the sort of person who are not self-motivated, who can't have your own indicators and goals, it would have been a harder shift for me, right? But it's definitely a shift in being able to adjust to the fact that you are it, right? And getting the tools, understanding the new landscape, you have to be able to understand. There's still some industry lingo, like what are the conferences I need to go to, what are the networks I need to be in. So yeah, definitely there is shifts, and luckily, I've been privileged to meet some very nice people and some very nice networks that has helped me. But definitely a shift.
That's good. Current wealth advising thing, right? So what exactly? Let's say I have some money, and I need somebody to invest it for me. Should I be going to you? I mean, what would you exactly do with that money? Can you tell me more about it?
Yeah. So I think in a broader sense, there is what are called as RIAs, right? Registered Independent Advisors, which is what I am, right? And my role is a fiduciary role, right? Similar to a doctor who has a fiduciary oath to a client, that a patient, that do no harm, right? So first and foremost, I'm a fiduciary, right? In the Polaris Capital Management role, right? We'll come to Axel, I will talk about this later. But through Polaris Capital Management, I'm a fiduciary. When I have a prospective client come in, we try to understand their needs in terms of their financials, what are the goals and objectives, and we design solutions for their financial needs with their best interest in mind. So that is our first goal, right? So if you come and say, hey, I have XYZ amount of money, can you build a portfolio for me? That's one set of clients. But there's also clients who say, I have all these needs and I want the full financial plan, right? But when it comes to the portfolio itself, the first thing we ask clients is, hey, what are your goals with this money, right? Make sure, this is money you're willing to invest longer term and don't have to pull this out quickly, right? But apart from that, really, it's like, what do they want? Do they want income out of this? Do they want growth out of it? What is their age? What are their family dependencies? So we try to understand what their needs are and what is behind the numbers, rather than just saying, okay, great, you want to invest? I'm going to put you on some investment vehicles. It's really more holistic conversation on what they want the money to do for them.
Okay. So it's just like any other wealth advisor. You'll manage your money, and then what do you charge for managing that money for people? Yeah.
So again, wealth advisors come in different flavors, right? So you have the big houses, Morgan Stanley's, JP Morgan. So I am an independent advisor, right? Financial advisor. That's the one thing. I don't have any commission-based products or any products to sell. Like that's one differentiation. And you deal with me, right? I deal with all my clients today, and that's how we like to provide a more I'll call it in quotes boutique solution, but it's really catering one-on-one and making sure that we understand the needs of the clients well and serve them well, right? That's the primary goal, right? And for me, this should be by no means a criteria for anybody coming to Polaris or choosing us, but I personally like to have go to people who have been there, done that, right? And from my perspective, I have managed my own wealth, and I've made it successfully in a financial well-being space, right? And I think that's one differentiating factor for Polaris. And again, that should not be a criteria for anybody listening to this. This is not advice, but that's one thing I would say. being independent, being able to provide that one-on-one connection, as well as having been there and done that, especially in the tech space or otherwise, I think that's some sort of a differentiating factors in some way.
No, I totally agree with you because I work with one of the very, very reputed firm, and they do a call with me. And in that call, all they're doing really is, well, they show first 15 minutes is just showing the portfolio, but rest 45 minutes is like selling various their products. And it is interesting to have someone who is not attached to a big firm and just not selling their products, but choosing best products out there. So that totally makes sense. And then I think you have other models as well, right? That you work with people in. If you can say, then what can you say about your other models in which you work with people?
Yeah, so Polaris, like I said, it's basically two sets of clients, broadly speaking. One is like what you're pointing out. Hey, here's some money we want to invest. Help us build a portfolio. And the other service we offer with Polaris is people want A to Z financial plan, right? It's called comprehensive financial planning, meaning we help people with their 401ks, the 529s. We need to buy a house. Should we buy one? What should be the range of houses we should be purchasing? Mortgages, insurance, right? Your perks at work, and am I fully utilizing that? We work with the CPAs to do financial tax planning. We can't file taxes, but we work with client CPAs to assist with the planning. So those are the two models with Polaris. And obviously we have another offering, which is an HSA investment fund. And I'm happy to share a little bit about that if you want to delve into that.
Yeah. We would definitely want to know whatever you can share.
Yeah. So HSA investment fund is under Polaris. It's a separate entity. And it's a 506B, so I cannot talk in details, but it's a private investment partnership and it's pool capital, right? So with Polaris, everybody has their own accounts, it's separately managed accounts, but a private investment partnership, it's pool capital. The fund has its objective. In all cases, I'm a fiduciary, but the fund has its own objective and we invest for the objectives of the fund. And I'm the general partner of the fund, and whoever invests in the fund is a limited partner. And based on the criteria of the fund, that's what we try to achieve, right? So that's the HSA investment fund.
That's great. Actually, that's so similar to what we do, right? We run syndications, and previous our offerings were 506B, and so I exactly know what you're talking about. Like, it's just that we deploy our capital in real estate or multifamily specifically, and you deploy it somewhere else. And I totally understand why you can't talk about it. Those are SEC rules, so we should respect that absolutely. Yeah, I mean that's great. That's great. And is there? Can you give us some scale of like how many clients, how much money you manage, or whatever you want to say? Like, just give people like scale of things.
Yeah, for sure. I mean, on the Polaris side, I can talk freely. And for your listeners, any financial advisor, an RIA, a registered investment advisor, you can look them up on the FINRA website or the SEC website, and you can look at. We have to file documents at the end of every year. So basically, for 2025, I'll be filing those soon, and you can see the number of clients we have, how much assets we manage, and so on and so forth. And there's some nuance here in the sense, we differentiate between, okay, we have 13 households, but I have around 36 accounts, right? So my clients have multiple accounts and so on and so forth. But we advise for around 13 households, 36 accounts, and the direct assets under management that we call at the end of 2025 was a little about 10 million, right? Now, mind you, this is the direct portfolio management that we do. The advice that we give is on a lot more of a, right? Because
it makes sense. Yeah.
1K, 520, that's a separate thing. A little over 10 million is what we have with our custodian, which is Schwab. we have around 10 million in the portfolios for our clients.
Yeah. And is there a particular state you are registered in? I mean, or are you allowed to work with clients across the United States?
Yeah, great question. I mean, these are things that a lot of people don't know. So I can work with clients in any states in the 50 states, Alaska. There's no restrictions in that sense. I am registered with California till I hit a particular asset under management number, right? I won't bore you those details, but after that point, I have to register with the SEC. Yeah, but the fund itself, HLA, is registered with SEC.
Okay, I understand. Now, obviously, you deal with a lot of high-income individuals.
Mm-hmm.
Is there something that you think they are doing wrong, in your opinion, that it's a common thing that you've noticed and they should be doing? Because a lot of my listeners are probably high-income individuals.
Yeah, no, that's right. High-income individuals, whether it's business owners or we deal with a lot of people from the tech background. So I can definitely talk to the tech background. But I think this is more a common thing. People generally flock to what they're aware of, right? And they tend to invest in what they're aware of or what they feel is in sometimes is tangible. So, for example, most highly compensated tech people, they tend to hold their own company stock, right? And they I don't blame them. I mean, look at the last 15 years. It's very hard to say, hey, here's the better bet, right? But I think what might be happening now is that bias might be playing its role out. So I think really diversification, right? The only free lunch, as we say, is diversification. So you can diversify from your own company stock to other stocks, to other geographies. That's one thing. And on the other side, we also see people who love real estate, right? They have a lot of real estate and they're not into stocks, right? So in general, I would say diversification is one thing that people generally tend to not do, right? And they come in a time of crisis to diversify, which is very hard, right? So that's one thing people need to take advantage of. And people are not aware of the various instruments of investing, right? So like there's a financial advisor, there's private equity, there is venture capital, the differentiation between these things, right? They get thrown, everybody throws ads at them and saying, hey, there's this, there's that, you invest in this and this and that. And there's not enough education, I feel, at least in my opinion and my experience, that clients are not aware of these things. I would also say many people leave money on the table in the sense that the employers provide many ways to save, whether it's be HSA, or a backdoor Roth, right, where you can save more money than your 401k does, right? But there are perks that we see people leave on the table because they're just not paying enough attention, or it's not in their wheelhouse. So I would say those are some of the common things that we see. One last one I'll mention, which is not really a financial thing, but it's more like mental accounting. People say, oh, RSU money, right? Whether it's like stock units money, options money, and bonus money. But RSU is just, in the grand scheme of things, another paycheck, right?
Yeah.
So, treat it that way, and if it works for you, and make sure you plan taxes accordingly, and so on and so forth. None of this is advice, but since you asked, I'm just giving you some flavor for some of the common things that we see.
Right, that's great. No, that's great. And I think if our listeners want to contact you and know more about stuff, how can they contact you?
Yeah, sure. You can find my website at Polaris Capital Management.net. It's .net. Also, unfortunately, there's another Polaris Capital Management somewhere in Boston. So that's a little bit confusing. You can reach me, Adi, at Polaris Capital Management .net. Yeah. So those are my emails. The fund itself is a little harder. It's achala.com, atchala.com, and adi@achala.com.
Okay. Okay. So they can reach out to you any of these. And if you couldn't remember this, then just reach out to me and I'll connect you with Adi. Yeah, that's great. I think your journey is interesting, and I find it pretty much similar to me. And I just that our paths are different. I went into real estate, and you went into the stock side. I will definitely keep working together. I'm pretty sure about it. And thank you very much for your time.
Hey, thanks a lot, Vaibhav. Yeah, like you said, there's many ways to skin the cat, and there's a lot of opportunities for people to achieve their financial well-being. So I thank you for the opportunity to talk to wherever the audience is, and we'll continue to stay in touch. And thanks a lot for this.
Thanks. And you are listening to the OMC Real Estate Podcast. Our website is oldmoneycapital.com, and our YouTube channel on which this is going to get featured. If you haven't subscribed that, please subscribe it to it. And our Instagram handle is oldmoneycapital123. And thank you very much.